Hello dear students, I welcome you all to my YouTube channel, that's Akifa's Commerce Classes. So in my previous session I solved one problem on balance sheet. So even in today's session I will be solving one problem of balance sheet with you all. So let's start solving the sum by marking them first. So the first that we have is equity share capital. So equity share capital will come under share capital. So we need to see if preference share capital is mentioned in the sum or no. Okay. Next we have general reserves. Now we know that general reserve comes under reserves and surplus. So we need to find if there is any more item that may come under reserves and surplus. Then we have profit and loss account, credit balance. So in my last sum also I explained that if profit and loss account is mentioned on the credit side, then you have to add it to the reserves and surplus. Similarly, if it is on the debit side, you need to deduct it from reserves and surplus. Here we can see it is on the credit side, so we will add it. So right here it will come under reserves and surplus. The same with this will come under reserves and surplus. Alright. Next we have debentures. So we know debenture is a long-term borrowing. So let's mark it long-term borrowing. Now, what do you mean by debentures? So, students, every company needs funds. Every company that has been started, it requires funds in order to operate their business. So, most of the companies, what they do is, they raise the capital that is required by them through issuing shares to the public. But this option is not available, or maybe you can say it's not feasible to all the companies to go to the public, especially those companies which have been just recently established. So apart from issuing shares, there is another way through which the companies can borrow, and that is through bonds and debentures. So a debenture is a debt instrument that may or may not be secured by any collateral. So the government or the companies, they use these debentures for raising capital by borrowing money from the public. So a debenture, in simple words, it is like a legal certificate that says how much the investor has invested and the interest that has been paid to him with the scheduled payments. So here what happens, the investor of the debenture, he gets the principal and the interest at the end of maturity of the debenture. So you can say it is a long-term debt which the company takes in order to raise capital. So that's why it is long-term borrowing, because it is for a long period of time. Next we have is goodwill. Next we have is land and building. So we know land and building is a tangible asset because we can see, touch and feel it. So land and building, and then we need to check if there is any more item that comes under tangible fixed asset. So we can see there is tools and equipments. So let's mark tangible fixed asset, and here also tangible fixed asset. Next we have goodwill. We know goodwill is an intangible asset. So just mark it, goodwill, intangible asset. Next we have bank overdraft. So where will bank overdraft come? So bank overdraft is a short-term borrowing. Okay. So just mark it first, short-term borrowing. Now why is bank overdraft a short-term borrowing? So when a current account holder, okay, when this current account holder, when he withdraws more amount of money is compared to what is available in his bank account, it is known as a bank overdraft. So bank overdraft is what? It is a liability to the company because the company has to pay it off someday or the other. So we write bank overdraft in the left hand side of the balance sheet. It is under liability side because it is for a short period. That is short-term borrowing. Next we have is proposed dividend. The proposed dividend is a short-term provision. Now why is it a short-term provision? Because proposed is defined as the amount which is set aside every time to meet any future liability that the company may face. So these provisions now, they are usually made to finance short-term needs, that is within a period of 12 months. Therefore, it comes under short-term provisions. Next we have is prepaid insurance. So prepaid insurance is our other current asset. So let's mark it, other current asset. So why is prepaid insurance other current asset? because prepaid insurance, it is a part of the insurance premium that we have paid in advance, okay, and it has not expired as of the company's balance sheet. So the unexpired cost, it is reported in the current asset under prepaid insurance. So next we have mutual funds. So the company has invested into mutual funds, so it is an investment from the company's side. So this will be current investment. So you know what is mutual funds? So mutual funds, it is like a vehicle which is made up of a pool of money which is collected from many investors, and this money that has been collected from the investors, what the mutual fund agencies do is they invest these funds in securities like stocks, bonds and other money market instruments. So this mutual funds, they are operated by professional money managers who allocate their funds asset, and they attempt to produce capital gains or income for the ones who have invested into the mutual funds. So it is, in simple words, a kind of an investment. So that's why mutual funds will come under current investment. Next we have is interest payable. So interest payable is our other current liability. Interest payable is a liability and it is usually recorded on the liability side. It is a liability because the interest is payable. It means we have to pay it but we have not yet paid. Therefore, it is other current liability. Okay. Next we have advances to employee. So advances to employee will come under short-term loans and advances, because an advance is given to the employee, so it will be for a short period of time. Short-term loans and advances. Next we have discount on issue of debentures. Now discount on issue of debentures will come under other non-current asset. Other non-current asset. So debenture is long-term borrowing, but discount on issue of debenture is other non-current asset. So when the debentures, they are issued at a price that is lower than the face value or the par value, then it is said that debentures are issued at discount. So the difference between the issuing price and the face value of the debenture is known as the capital loss. So this loss, it is written off every year. It is written off till the date the debentures are redeemed. So the loss on the issue of debenture is shown as a asset on the asset side of the balance sheet. Next we have is gratuity fund. So gratuity fund is for a long time. Why? Because this is under long-term provisions. We usually have those provisions that are created for employees, and any fund that is created for employees is usually for a longer period. So what do you mean by gratuity fund? So gratuity is actually a sum amount of money which is paid by the employer to the employee for the services that he has provided to the company. Okay, so therefore it comes on the liability side of the balance sheet under long-term loans and advances. It is an asset to the employee, but from the employer's side, the employer is paying it. Therefore, it comes under long-term provision. Next, we have debtors. So debtors comes under. Next, we have debtors. Also, we can see we have bills receivable. So debtors and bills receivable both will come under trade receivables. Trade receivables. Next, we have cash at bank. Cash at bank comes under cash and cash equivalent. Next, we have stores and spares. So that comes under inventories. And last, we have sundry creditor, which comes under trade payable. So this is how you are supposed to first mark everything on the question as to which item comes under which heading. So once you are done with this, then you just have to prepare the format and just fill in the items. So when you do this, at least 60% of your problem is completed, because now you just have to copy the item and paste it in the balance sheet. I have solved the balance sheet here, and what I have done is on the basis of the markings that I had. So you can see that I have 3 working notes, that is for reserves and surplus, tangible assets and trade receivables. So under reserves and surplus, we have general reserve and profit and loss account credit balance. Therefore, we will add both of them, and that is working number 1. Next, we have tangible fixed assets, under which we had land and building, tools and equipments. We need to add both of them, that is our working note number 2. And the last is trade receivables, wherein we had debtors and bills receivable. So we add them up, and that is our working note number 3. So this is all for today's session. In this session, I solved one problem on balance sheet, and in the next session also I will be solving one problem on balance sheet. So if there are any queries, any questions or any doubts, then please put it down in the comment section so that I can address to those queries. Also, if you liked my today's session, then please like, share and subscribe to my channel.